It's a brisk winter morning and you're in a rush to take out the dog before you head to work. As your canine pal leads you out the back door, he pulls just a little too hard and you tumble down the stairs, injuring your back. The doctor tells you you'll be out of work for at least a month. Now it's time to figure out how you'll pay the bills. You might assume that your company's disability insurance will cover your accident and help get you through your recovery process, but the fact of the matter is that may not be the case. The majority of employer-sponsored disability insurance policies only cover accidents or issues that occur while you are working. So that spill you took on down your back step likely won't be covered. That's where personal disability insurance comes in. Why it's worth thinking about: if something happened to your home or your car, your insurance policy would help cover the damage to keep you and your family safe. A disability insurance policy works in the same way. Having your own disability policy is a great way to be sure that you will have enough income to cover your expenses and provide for your family in case of an illness or accident. Even if you are covered by your employer's disability policy, it's unlikely you'll maintain 100% of your previous income. According to a 2012 disability survey conducted by Life Happens, 1 in 4 Americans would immediately be dealing with financial hardships if they were unable to work thanks to a disability, whether it's paying the mortgage, making payments on student or car loans, dealing with credit card debt, or just paying your monthly bills. Without your paycheck to rely on, it's easy to see where issues could arise. Who should consider it? If you have a job that provides you with income you need to pay the bills, you should think about adding disability insurance to your financial plan. While many of us don't like thinking about the worst-case scenario, it's important to plan for the unexpected. If you had a short-term injury, consider how long you could afford to be out of work for without getting into trouble financially. Or worse, if you have a permanent injury that meant you weren't able to return to work, how would you survive and provide for your family? Long-term versus short-term disability insurance. Typically, a short-term disability insurance policy is intended to help you for anywhere from 60 to 180 days by providing you with a substantial portion of your paycheck. This could be utilized in the event of being pulled down the stairs by your dog to cover part of your paycheck while you recover. Now, if you had a more severe fall and were out of work for 6 months or longer, that's where long-term disability would be useful. These policies kick in after you've been away from work for up to 108 days. They likely won't cover as much of your salary as a short-term policy might, but that coverage can last for years. Jim Sandiger photo, special to the register. While many companies offer disability insurance policies to their employees, it's up to you to do the research and find out which policies are available to you and how they work. If you have any doubts, consider talking with a financial advisor about getting your own policies to ensure that you and your family are taken care of no matter what happens down the road. Jim Sandiger, CFP, Senior Vice President Financial Advisor at Wealth Enhancement Group and co-host of Your Money on News Radio 1040 WHO on Sunday mornings. Read or share this story. http://dmreg.co/2dktbvr